What's going on, everybody? It's Jeff here. Welcome back to the channel. Hope you all had an amazing weekend. September is off to a rocking start, but there are some big changes happening. We're going to go over everything in this video. But first, I want to give a massive shout out. Disney's latest Marvel movie absolutely knocks it out of the park. $90 million at the box office. First 4 days, setting a Labor Day weekend record. Now, this is not a post-pandemic record. This is a Labor Day weekend record. When so many people are out having parties, especially when you're in part of the country like I am up in Connecticut, where you know summer is coming to an end, the movie theaters are still smashing it. So shout out to everybody that said the movie theaters are dying. It's going to be a great week ahead for us in AMC. I'm getting very excited because of this $47-48 knock that we are going to be testing, looks like for the fifth time. You are starting to finally see an uptrend. If we go back to everywhere where we were since this last June run up, we really haven't had a nice solid uptrend like we are starting to see right now. Leg up, a little bit of consolidation, and another bump up. So it's going to be a great 4-day week ahead of us. And as you know, last time when we ripped out of the gate up here to 72.62, I think it was 77 pre-market, was after that Memorial Day weekend. So that's going to be exciting for AMC. Now let's talk about everything else that is going on inside the market. You have the federal unemployment benefits that are ending this week. Now the CARES Act that was passed after the pandemic began originally gave Americans an extra $600 a week in their jobless benefits. It was cut down to an extra $300, and now that is ending. It's not an easy thing for Congress to be able to pull this, and really, especially because there are still millions of Americans out of work. However, look at the job growth. It has stalled. We went over these numbers, 235,000 in August. They expected 750,000. Okay, so this is it's going to be a little bit of shakiness going forward. We also have Goldman Sachs saying that they expect 750,000 households that could be evicted by the end of this year as the eviction moratorium has ended. Another thing that is not easy for Congress to pull because you have two different sides fighting each other. However, eventually it does have to come to an end. So keep that in focus. The last thing I want to mention is this right here. This is the September showdown for the debt ceiling. We talked about this back in August. That's the suspension for the debt ceiling had ended. They haven't raised the limit and they didn't continue that suspension to happen. So investors are going to be paying a close eye to see exactly what happens so we do not default. That would be very, very bad for the market. Now let's take a look exactly where the market stands and give you my take on where I see this going. This is the SPY right here tracking the S&P 500. It is held very well, especially for the second year of its bull run. It's just been ripping up, bounces off that 50-day moving average, continues its trend up, and it's been doing that same pattern. We have recently 1, 2, 3, 4 touch points, and every single time, if you map out these flats, this is about 18 days. I think this one here is about 20 days. And here we are, and it's looking to do the same exact thing. Now, I do expect September to continue to be a green month and a good month for us. Going into October and November, I am a little bit shaky as we eventually move into winter. However, every single week, there are so many changes happening. Look for this to start to see a little bit of toppiness, get a little frothy, it to come back down and retest that 50-day moving average. So, pay close attention with any positions that you have. If it breaks that 50 moving average, it will most likely come pretty hard down to that 100 moving average. We still haven't seen a 10% correction in the S&P 500 since March of last year. Now that time frame is just getting to be more and more extended, and that the percentage of it happening just continuously increases as time continues to move on. The Nasdaq did fall back in February 11th. It did have its 10% correction, which falls in line, but the S&P has not had that. So keep an eye going forward. If you are interested in having our full pre-market notes, first link in the description, come check it out. Every morning, really close to market open, I go over the top plays that I'm looking at and where I expect them to move based on this current support and resistance for pre-market. So if you're interested, first link in the description. We'd love to have you. I'll see you in the next one.